Colin, the reason you're downgrading them and the EV names is because you say the untold electric vehicle crisis is coming. What do you mean by that?
Yeah, I mean, we did. We actually done some, extremely proprietary research. We actually tore down a Tesla Model Y performance vehicle, and we actually were able to get from the engineers that tore that down very detailed cost information. What's exciting too is that we'll actually be doing more EVs over the next few weeks. So this is just a first in a series of reports. And what the most shocking thing, I mean, Tesla's a pretty well-known car, but it's the raw material costs have actually spiked much more than we were expecting. So if you go back to 2021, you're talking about $112 dollars per kilowatt hour battery that's now about 168 according to those experts. That really puts cost parity between a BEV and an ICE, at least another 10 years out.
Well, at the same time, there's a lot of people who would be angry at you for tearing apart a perfectly good Tesla Model Y that they're waiting for and trying to get their hands on, like someone over here who will go unnamed. So I guess my point is, are buyers really that price sensitive in the case of Tesla, especially, although in fairness, I don't know if that was part of your downgrade today. So in other words, why do you think the higher costs for Tesla are bad news for GM, Ford, and the rest of the space?
So, I mean, the teardown is just the first step of the research report we put out today. So, one, we found that those raw material costs were high. And so what we did is we dug into the raw material supply chain to really understand whether that is going to stay sustainably high, right? I mean, this is just a temporary blip. And I thought was very concerning is if you go out to 2030, 6 of the 7 key raw materials, copper, nickel, lithium, all will be very tight on supply at that point. And so it's really hard to see, an opportunity for these to sustainably correct downward. And that really is a big challenge because the economics of the BEV, which are particularly that nickel-based chemistries that everyone is moving toward, really just doesn't work. I mean, we've talked about $100 per kilowatt hour target, sort of the point where people think that's parity. The raw materials in that battery went from 62 to 119. So it's just impossible unless costs come down. And the problem is it doesn't look like they're going to. And then you layer on that, and that's really the driver of the downgrades for GM and Ford, the regulatory framework, which has been completely ignored by the market. NHTSA and EPA, issued some very, very challenging standards. And so it basically forces the automakers to sell these vehicles. And they're, at this point, because of the sudden change in economics, they're going to lose money. This is very reminiscent of old compliance rules where, the automakers might actually be forced to sell money losing products to hit those standards. And that's really the driver of the downgrade. I think Tesla's in a little bit of a different position because they don't have to sell, the ICE and have to balance this transition. I do think, and as we wrote in our report, by, the next 6 months after you ramp all of these volumes, to compensate for this cost increase, they're going to have to raise price, and that's going to shrink the addressable market for them.
Well, that's what I want to ask you. You say that because of the regulations, they're going to have to sell at money-losing prices. Why? Why can't they just raise the price so that they make a decent profit on the car? I get the idea that if you raise the price, you are reducing the addressable market by some level, but I got to think that a lot of the manufacturers do have pricing power. Ford talking about their F-150 electric vehicle, Tesla, which certainly seems to be selling plenty of cars.
Well, so the cost parity right now is $10,000. If you go around the world, cars around $40,000, you probably make a 5% mass market margin, $2,000. We're nowhere close to being profitable. So how do you get a customer, if you're buying it, to pay that price difference when you're on the lot choosing between an ICE F-150 and the Ford Lightning? That's a big issue here. I mean, so you're competing against your other internal combustion vehicles. That actually is going to keep that EV price down. And I think, there is a question of how much, it's still a product. How much are people willing to pay for these products?
Yeah,
what kind of BEV premium are people willing to pay? I just don't think it's going to be over $10,000.